As of Saturday, August 1st, 2026, the U.S. stock market is currently closed for the weekend. KEEL Infrastructure Corp., trading under the ticker symbol KEAL on the NASDAQ, wrapped up its most recent trading session on Friday, July 31, 2026, with an official closing price of $4.05 per share. That marked a sharp intraday jump of $0.87, representing a massive 27.36% gain on heavy trading volume that pushed past 66 million shares. For traders watching their screens on the Fidelity mobile app or tracking tickers through Robinhood stock trading, that kind of single-day surge immediately catches fire across financial forums and investing sites. The dominant market narrative surrounding KEEL Infrastructure Corp. suggests this is just another speculative crypto miner attempting to ride the hype train of artificial intelligence by slapping a fresh corporate label on old server farms. But when you strip away the superficial chatter on popular individual brokerage apps and look at what is actually happening behind the scenes, the reality tells a vastly different story. What Wall Street is slowly realizing is that KEEL Infrastructure Corp. is executing one of the most aggressive structural pivots in energy real estate, transitioning from a volatile Bitcoin hash rate operator into a dedicated owner-operator of high-demand power interconnects for artificial intelligence and high-performance computing workloads. The expectation was that former crypto mining operations would struggle to secure institutional capital due to high debt loads and inefficient legacy hardware. Yet the reality unfolding in recent trading sessions reveals that institutions using Interactive Brokers trading platforms and Fidelity Wealth Management services are quietly building positions in KEEL not for its past Bitcoin output, but for its secured gigawatts. In the most recent session, trading activity was not driven by retail traders making speculative bets on a SoFi active investing account or placing small orders through Robinhood Cash Management. It was powered by institutional order flow recognizing the underlying asset value of KEEL Infrastructure's grid interconnections in power-constrained regions like Pennsylvania, Quebec, and Washington. While retail investors often compare KEEL to high-profile megacaps like Tesla stock, Apple stock, or Nvidia stock when looking for growth plays in their SoFi Robo-Advisor or Schwab Intelligent Portfolios, KEEL Infrastructure occupies a completely unique niche in the value chain. Nvidia stock makes the chips. Apple stock and Tesla stock deploy massive consumer and industrial workloads, but KEEL Infrastructure controls the actual high-voltage electrons and physical land required to run those multi-megawatt computing clusters. Looking closely at recent stock price action, KEEL has broken out of its multi-month consolidation zone between $2.80 and $3.20, pushing rapidly towards its current $4.05 mark. This price movement has been accompanied by a distinct shift in options activity and dark pool volume. On major Interactive Brokers platform setups and Fidelity brokerage accounts, call option volume on KEEL spiked significantly above its 30-day average, signaling that institutional money is positioning for additional catalysts over the coming quarters. The broader tech and power sectors have faced tightening regulatory hurdles and rising grid connection wait times that can stretch up to 7 years in key markets. KEEL Infrastructure bypasses these bottlenecks because its existing footprint already boasts over 300 megawatts of energized capacity and a multi-year pipeline scaling up to 2.2 gigawatts across strategic campuses, including Panther Creek, Scrubgrass, Sharon, Moses Lake, and Sherbrooke. Investors utilizing online investment tools or building an intelligent portfolio on SoFi Invest platforms are taking notice that power interconnects are becoming the scarcest asset in the digital economy. Before we go any further into the detailed financial breakdown and future projections for KEEL Infrastructure Corp., I want to pause and get your input. Comment below how many shares of KEEL Infrastructure Corp. ticker symbol KEAL you currently hold in your portfolio, or tell me if you are waiting for a pullback before entering. To appreciate why this contrast between market perception and operational reality exists, we need to examine what KEEL Infrastructure Corp actually does at its core. Founded initially in 2017 and operating historically as a digital asset mining entity, the company built an extensive footprint of real estate assets, power substations, transformers, and high-voltage transmission lines across North America. Its business model centers on acquiring, developing, and operating energy infrastructure tailored specifically for high-performance computing. In simple terms, while cloud providers need physical space and massive electrical capacity to power thousands of graphics processing units, KEEL Infrastructure provides the turnkey environment, securing megawatt capacity in energy-constrained power markets. Their facilities in Pennsylvania, for example, leverage strategic locations near major fiber trunks and dense population centers, allowing low-latency connections for complex computing tasks. Additionally, cool climate campuses like Sherbrooke in Quebec allow the company to operate with exceptional thermodynamic efficiency, lowering cooling overhead costs. Historically, investors using an individual brokerage or exploring Invest Online features on Robinhood app or SoFi trading platform viewed companies like KEEL solely through the lens of Bitcoin price swings. If cryptocurrency prices dropped, stock valuations plummeted, regardless of how much physical infrastructure or electrical power capacity the business owned. Past financial reports reflected this volatility, showing revenue fluctuations tied directly to block reward halvings and energy price spikes. However, the recent structural reorganization transformed the financial profile of the business. By shifting focus towards hosting third-party high-performance computing hardware and signing multi-year hosting deals with enterprise clients, KEEL Infrastructure is converting erratic crypto revenue into predictable, contract-backed cash flows. This operational transition is why Interactive Brokers fees and Interactive Brokers trading metrics show a noticeable uptick in volume from fundamental value investors who normally avoid pure-play crypto assets. When building a modern investment portfolio, whether through Robinhood fractional shares, SoFi active investing, or curated Fidelity ETFs, investors look for structural tailwinds. The massive growth of global artificial intelligence processing demands an estimated 40 to 50 gigawatts of new power capacity over the next 5 to 7 years. Standard utility companies simply cannot build new transmission infrastructure fast enough to satisfy this demand. That gridlock gives KEEL Infrastructure immense leverage. Hyperscalers and cloud tech giants are willing to pay significant premiums to lease data center capacity at sites that already have grid interconnections locked in. KEEL's 2.2 gigawatt multi-year development pipeline positions it as one of the few pure-play digital infrastructure providers capable of offering rapid speed to market for high-density compute workloads. Looking toward the future outlook, several distinct catalysts and scenario paths could dictate where KEEL trades over the next 12 to 18 months. In a bullish scenario, KEEL Infrastructure successfully completes major power conversion milestones at its primary campuses in Pennsylvania and Washington, securing firm, long-term lease commitments from major cloud providers or artificial intelligence firms. If those contracts are announced, equity analysts across major investing sites and Fidelity trading platform hubs will likely re-rate the stock, moving its valuation multiples away from low-margin crypto miners and aligning them closer to premium data center real estate investment trusts. Under that scenario, the current $4.05 price tag could be viewed in hindsight as a ground floor entry point for investors who embraced self-investing and acted before the broader market fully recognized the shift in the power yield. Conversely, investors must remain clear-eyed about the operational risks and potential downside scenarios. Capital expenditure required to retrofit legacy crypto facilities into high-density artificial intelligence data centers is substantial. If KEEL Infrastructure experiences delays in sourcing high-voltage electrical equipment, transformers, or liquid cooling systems, or if capital markets tighten, the company may need to issue debt or equity, which could temporarily dilute existing shareholders on Robinhood stock trading and SoFi stocks platforms. Furthermore, state and local regulatory scrutiny around large-scale power consumption remains an ongoing factor that investors utilizing investment help resources or tracking stocks on Schwab Intelligent Portfolios must monitor closely. Ultimately, the gap between market expectation and operational reality is where the greatest opportunity lies for disciplined investors. The surface narrative still views KEEL Infrastructure Corp through the lens of its past as a crypto miner, keeping retail sentiment cautious. The reality is that KEEL has repositioned itself directly at